All right, today, very interesting note coming out of Jefferies talking about how a mix of high quality mid caps and, of course, some large cap stocks could turn out to be 5-year bets, and you can expect 2 to 3 times return in a collection of those stocks. Which are exactly those stocks and what are the triggers out there? Ashesha is joining us with the report from Jefferies. Ashesha?
Well, yes, indeed. Jefferies has come out with a very interesting report on their top bets for the next 5 years. They've presented 11 ideas which could generate a return of about 15 to 20% on a CAGR basis over the next 5 years. In that, the first one we have is Amber Enterprises. The company, or rather Jefferies says that it is expected to be a beneficiary of the manufacturing boom that we are seeing in India. The second stock that Jefferies has highlighted is Ambuja Cement, where they say that strong cement demand from capex upcycle is likely to drive 19% EBITDA CAGR for the company over the next 5 years. Let's move on and let's talk about the third stock that they have on their radar, and that is Axis Bank. They say that the company could generate 17% loan CAGR and 19% EPS CAGR over the period FY24 to 29. The next stock that we have is Bharti Airtel, where they say strong EBITDA growth along with moderating capex is likely to generate revenues and profitability for the company over the next 5 years. Let's also talk about a couple of other stocks that Jefferies has on its radar, and the first one we have is JSW Energy, where they say that nearly 3 times capacity jump is what we could see, and renewable share could rise to as much as 80% in the coming years. L&T meanwhile could register 15% revenue CAGR over the period FY23 to FY30. Moving on to Macrotech developers then, where Jefferies believes strong housing cycle is expected to drive 17.5% pre-sales growth for the company. And for Max Healthcare, under penetration in quality healthcare and doubling of Max bed capacity could aid growth for the company from here on. Let's also talk about a couple of other ideas then, and we have SBI, where they say 13% loan growth driven by retail and MSME segment is likely to generate higher profitability for the company from here on. TVS Motors meanwhile is likely to be a key beneficiary of revival in Indian two-wheeler demand and transition to electric two-wheelers. And lastly, we have Zomato, where Jefferies believes lower penetration levels in core segments offers huge runway for growth for Zomato. So these are the 11 ideas which Jefferies has listed out in its report, which could generate 15 to 20% CAGR return over the next 5 years.
Excellent. Thanks very much for that, Ashesha.